Welcome to Affiliated, everybody. We are joined by Tommy Thornburg from Prime Corporate Services and our very own failed CPA, Kyle Kosechka, who is now.
I could tell you about your taxes, but you shouldn't trust me. There you go.
But no, this is the fun part of business, right? Where we talk about taxes, and the reason why we make it fun is because we bring like people like Tommy on, and Kyle's interrupting our Tommy fun here. But
yes,
what I'm excited to cover, right? It's because we hear everyone talk about gross revenue numbers, we're crushing it, this many sales have happened, all this kind of stuff. But as you know, Tommy, it's not what you make, it's what you keep, as you love to say. And we see it every day with clients who on the front look super happy, and on the back end, they're super stressed out because their cash flow and their personal income is in shambles, and they don't know what's going on in their business or in their personal lives because their finances are all over the place. So thank you for joining us, Tommy.
Of course. Thank you for having me. It's not what you make, it's what you keep, like you said. And taxes truly are a game. It's become that. The tax code is so large that it's not the most exciting part of business, but it is one of the areas that you have to deal with on an annual basis. And the more you know how to play the game and the more you can implement a lot of these tax strategies into your business, it just becomes part of who you are and what you do. And it makes it a whole lot easier to grow and scale when you're keeping more of that money in your corner. So I'm excited to be here. Thank you for having me.
Well, this is definitely exciting. So now I have a really weird question that'll frame for the rest of this conversation, because we talk about taxes as a game, which I couldn't agree more. It's one of the reasons, as Thomas said, I was a failed CPA, because I loved the game of taxes, particularly because it does tie to making more money, or at least keeping more money. That being said, what game would you say most similar resembles, or we could use as a metaphor for taxes? I figure we're in the peak of one of the best times for sports, as we have football, we have baseball, hockey's going to start, basketball's going to start. Fall is the time for sport. So as we're talking about a game, we're just going to make this all a sport or game themed podcast along with the taxes. I feel like that's the right way to go, just as I throw it on you, Tommy. So what's the metaphor we should use?
We've got college football coming up, and I love it. College and NFL, I think it's the best. And I will use this as the example. When I sit down and try and enjoy a football game with my wife, I can't help but get questions on what do those stripes mean? What are the people looking like zebras doing? What does 10 yards have to do with anything? And similar to board games like Monopoly or Sorry, or even football for this example, without knowing the rules, it makes it very difficult to win. And the more that you understand it's 10 yards for a first down and the field's 100 yards, you have parameters that you're able to work within. And if football was the tax code, my wife would be overpaying terribly. So.
That's awesome. That is awesome. Well, I love that. That's a great metaphor. And this is where, if we had Dylan in the rights to make the gridiron, so the dun, 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 like the beginning of Monday Night Football, we'd kick that off, because I think that's the way you could frame the rest of the conversation, is all this comes through the idea of football.
Well, help us pick up some easy yardage here, Tommy. Like, where do people, hey, I'm proud of myself, and avoid those red flags, but where do people have the most room to make up? What I do like about this topic, though, by the way, is that what's great is that if you do save money here, either through different entity structures or just being smarter with your finances or saving, whatever it is, right? It's tremendously, you get some really fast gains from what is already coming in sometimes. So often it's not even like a boost to, like, you don't have to fix your marketing. You just fix your back end and your profits go up. It's like, hey, this is way better. So what
it's
are some
like
of those
getting a free
things
down in your business, right?
Yeah. Where are people screwing up, and how do you help them fix it?
The two most common areas that we see, the first is definitely tied to entity structure. If you're not set up properly, you are very likely going to overpay in taxes. And an example that I'll share is when people are first getting started, it is very advantageous to have an LLC even before you're making money, because you set up a solid foundation to build and grow your business and take deductions to show that you have the intent to generate income. But then where a lot of people end up just not making the change because of the lack of knowledge is, once you're generating, usually we see $30,000 to $50,000 or more, you can change the LLC so that it's taxed as an S corporation. And that allows you to pay yourself a salary or a distribution. It also allows you to avoid half of your self-employment tax, which is Medicare, Social Security, saves you about 7%.
Is that 30, 50K a month, a year? Is that
usually 30 to 50 a year is where we start to see the benefit.
Okay.
Nice. So, and wait, is that net income that's coming home, or are we talking top line gross on an annual basis?
We look for gross to see if there's opportunities, but if the net profit is very low, then it likely doesn't make a difference to make a change because you have enough expenses to offset your revenues. So $30,000 net, I would say, is when it starts to become a no-brainer because you can justify paying yourself a salary or a distribution. But if you make $30,000 and have $25,000 worth of expenses with a $5,000 left over, that probably isn't going to make sense. So for sake of conversation, at $30,000 net, it's worth looking into. It's worth talking to a professional to see if there's thousands of dollars in tax savings. Because you take that example to $100,000 and it's a slam dunk to save thousands of dollars in taxes.
That makes a lot. That's way earlier on than I thought it would. I thought it'd be like, oh, you need to be making 7 figures for this to be like significant gains, but that's fairly early on in someone's business structure life, I guess, if you will, especially with the types of clients we usually work with over here. With the, so I'm setting up an LLC. I think I'm good to go, but I should be thinking, okay, should this be an S corp? Should they be able to take money out of it in different ways? What are some of the biggest fallacies that you find that people have when they come to you? I'm sure a common one is like, I can run it 100% of the car and it's going to be great. But like, what are you finding that you're like, actually, no, don't do that. It's going to be a problem.
Well, first, before we jump into that, Thomas, I feel like could we finish a little bit more on the entity structure of why you should be going to the S corp at that level? Because I feel like we didn't get to really build on that benefit. And then, I think we could circle back to that question too, Thomas. That was really good.
For sure. Yeah. I love LLCs. And the reason that I love LLCs is because of the flexibility that they offer. When I talk about making that S corp election change, you can set up an LLC, you can set up a corporation, you can set up a partnership. But I love LLCs because of the flexibility. You can change the way that it's taxed once a year. So oftentimes I tell people the 3 things that I would really take into consideration whenever you set up a new business. Number 1 is privacy and protection. How much privacy do you want? For instance, we have registered agents in all 50 states so that you don't have to use your home address so that it isn't listed on the state website as public information. Some people care about that, some people don't. But knowledge is power, and if you know that it's an option, then you give yourself the option to know what the differences are and how to give yourself that benefit from a privacy standpoint, right? Protection's going to change as your wealth and as your net worth changes. You care a lot less about your business when you're not making money than when you are making money and want to protect it. So it's still worth taking into consideration. So that's number 1. Number 2 is tax benefits, profit or loss, good or bad. How do you put yourself in a better position? And going back to it's not what you make, it's what you keep. Everyone wants to make $10,000 more dollars. Why do we not obsess as much on saving an additional $10,000? What if you go make $10,000 and save $10,000 and have that $20,000 net gain where now you can really start to compound the numbers to grow and scale quicker. And then number 3 is credibility. And I usually say this in 2 senses of the word. The first is showing your clientele that you are a legitimate business. And then also for banks and lenders, show yourself as a legitimate business. Statistically, people that are self-employed, there's a really cool website. I like it. It's called 80,000hours.org. And what that website claims is that the average person works 80,000 hours. And it says people that are self-employed generally make more money. Banks know this. Banks are businesses. So when you structure and show yourself as a legitimate business, you're showing the IRS that you have the intent, and you're showing banks and lenders that you truly are structured as a business. So I think it opens a lot of doors for you, not only from a tax standpoint, but from a banking and a funding standpoint as well.
So one quick thing.
Incredibly tired thinking about 80,000 hours. Like, oh my God.
Oh man.
I feel like I'm halfway there this week. So
yeah. Love what you do. Right. But just one thing to say. So going back when we mentioned going from, an LLC, which presents benefits to a certain level and lots of flexibility, but converting over to that S Corp to then have yourself get a salary and saving that 7%, it also sounds like it changes some of the things that you could do on a tax strategy basis too. Is there anything else on that S Corp that you should think of outside of just, hey, it gives you a chance to get a salary in there so you could expense that piece and, remove some of the other Medicare taxes, things like that? Are there other tax benefits of switching over to an S Corp, or maybe some risks from making that change that might stop people?
Yeah, so let's start with the risk, because this is pretty interesting. So last year, the IRS every year releases these statistics as well as annual tax code changes. And last year, they released a bunch of changes that were called Inflation Act adjustments. I about fell out of my chair when they admitted there was inflation. I was like, this is a good start. Okay, this is good. But when it comes to those risks, it's over 99%. Don't quote me. I believe it was like 99.2, but it was over 99% of audits happen to people as individuals. Less than 1% were audits on actual businesses. So to go back to the S Corp question on what the tax benefit is, just so we can use very easy math here, let's say that $100,000 is generated and you have that S Corp election. Due to the QBI rules right now that are supposed to expire at the end of the year, you get a 20% deduction. So you make $100,000, you don't have to claim taxes on the first 20%. So we've got $80,000 left over. With that $80,000, I could have either paid myself a salary, which would mean I paid myself weekly, biweekly, monthly, whatever. I have a set schedule. Or from a distribution standpoint, I can say I made $80,000 and I paid myself $40,000 throughout the course of the year. So it's a 50-50 split. So I've got $40,000 left over in the business. That's where you would take the remainder of your deductions, your phone, your internet, your power, portions of your rent or your mortgage for the home office expenses. So the benefit of an S Corp is you still get to show personal income to qualify for a car, to qualify for a house. But you also get to be a little bit more strategic on what the deductions are. And if you're tracking your expenses throughout the course of the year, that's one of the biggest tax savers that we see. Our clients that track their expenses save an average of $9,000 more than our clients that are scrambling to get receipts at the end of the year, whether it's QuickBooks, an Excel spreadsheet, actually hiring a bookkeeper, depending on where you are in your business. If you know what your profit and loss is going into the fourth quarter is business shopping spree season, baby. Buy the headphones, buy the computer, buy the mic, buy the things that you know are going to help you grow and scale into the next year. Because unfortunately, the tax code truly is use it or lose it. And when you're self-employed, you go make your own money, invest back into your business, and then pay taxes on what's left, which really gives you more control on how you're spending your money.
That's really awesome. I just want to kind of close that S Corp thing. That's a really amazing. Sounds like such a game changer of a move from a strategy standpoint, from a risk standpoint too. If you have fear of audits, and especially with the focus of auditing, kind of lowering that bar of who they go after and what individuals from an income standpoint, I imagine that could be an even greater concern. So really, really love that. So going back to Thomas's question, again, what are some of the other outside, I guess, tracking expenses and knowing your entity structure is truly the best? What are some other big pitfalls that people commonly fall into when they come to you with a pile of receipts and not enough income?
The pile of receipts. I probably shouldn't say this, but internally we call it garbage in, garbage out. And that really is what it is. If you don't know what your profit and loss is on a monthly or a quarterly basis, at the very least, you don't know what your tax liability is. So when I talked earlier and we were making the NFL reference, right? When we're playing football, it is very common practice to stretch before the game, to put your pads on, to get ready for the game. Part of that in being a business owner is tying and connecting everyday expenses back to your business. So one of the 4 words that the tax code really looks for: ordinary, necessary, helpful, and appropriate. If it is ordinary, necessary, helpful, or appropriate for you to generate income, when you spend $1, as you track those expenses, how can you connect them back to your business? So, for instance, your phone bill. A lot of people look at those as expenses or bills, but you need that to run and operate your business. So how can you connect it in some way, shape, or form to your business where I can't write off all of my phone bill knowing that I make personal phone calls, but there's percentages that I can write off, and a lot of that's going to be based off of usage as well as income. So the standard deductions are oftentimes plenty when you're making $100,000, $200,000 or less. Once you get over that $200,000 marker, that's when it starts to become fun. It's more money, more problems, right? It's running an NFL team with no market cap. It's playing with a lead at 21 points where you get to try some different strategies. Yeah. And that's where we try and help clients pay their kids, rent out their house, the Augusta rule. There's a lot of things that you're going to do anyways that if you track your expenses throughout, now you can strategize and you don't have to just spend money on worthless things. You don't have to go buy a G-Wagon or a Tesla because YouTube University said so. You can truly tie dollars back to your business that are going to benefit you for the future.
I'm always curious, like, how should a business build a war chest in your mind? Like if they want to put money aside so that's there, right now we're seeing a lot of CPMs rise for media buyers and for business across the board. Traffic's expensive. Things are getting a little tight. Like when and how should businesses keep money safe if they need to at all, so they can pay overhead, they can keep things running if income or if margin starts to tighten up a bit?
So one of our head CPAs wrote a book on this. He helps a lot of gym owners with profit first. And profit first is a very common business term where you pay yourself first and then you do the banking strategy afterwards. Don't tell our CPA I said this, but I am not a huge fan. And the reason that a lot of business owners love it because you're working so hard, you need to reward yourself and you need to pay yourself. You need to reward yourself for the efforts that you're making. But to answer your question, a lot of it is going to be based directly off of your risk tolerance. If you tend to be more of a risky entrepreneur and you are willing to put more on the line than others, that answer is going to be much different than someone that tends to be more conservative. One of my favorite books is Rocket Fuel by Gino Wickman. Have you guys read it? I love it.
Haven't read, but I've been told to read it many times. So
it changed a lot of the way that we do business, and it really helped me identify people that I work with. My favorite takeaway from it, he identifies people into 2 personalities, and it's visionaries and integrators. Visionaries tend to be a little bit more risky. They look into the future 3 to 5 years, and they just can print money. They take action, they go do it. Integrators sometimes get lost in the sauce, right? They get hung up on some of the details. And those 2 personalities are going to have a different answer to that, Thomas, to answer your question. If your risk tolerance is higher, you're more likely to still make the spend and to still go make it happen. If you're an integrator, break your income up into percentages. What do you need from a savings standpoint to make yourself feel comfortable so that you're operating your business in a place of comfort that doesn't totally flip your life upside down because of the risk that you're taking? So, tough question, but I would say run with profit first if you need to reward yourself and pay yourself first, or give yourself bumpers on percentages that you feel comfortable with to be able to operate within so that you still feel in control if you tend to be more of that integrator personality that likes to work, is willing to put in the work, but is a little more risk adverse.
So now the natural question next, Thomas, of course, for Tommy is, are we innovators or integrators or visionaries? Or is it different between the two of us? Who knows? Where do you think you are, Thomas?
I have visionary tendencies, but I would not say I'm that risk tolerant. So I'm probably more of the integrator piece. Yeah. I like to sock money away for a rainy day.
Smart man. Maybe you're just a smart visionary. Who knows, Thomas?
I'm curious, like,
the combination of the two is dangerous. And there's a lot of entrepreneurs, and I would imagine both of you have tendencies on both sides. I think that is not uncommon. But looking into the future and seeing where the roadmap is and how you're going to get it there, integrators, I would say all three of us do have some integrator in us, just due to the fact that we're here doing this podcast.
Right.
Steve Harward, our CEO, he just wants to go meet people, shake hands, kiss babies, and he's able to make things happen at a much higher level than I would be capable of doing. But I like doing the work. I enjoy coming into the office. I like working with the team. I like doing these podcasts. I like talking to you guys. And those are things that weigh the pros and cons. And that's one of we work with thousands of entrepreneurs a month. And a lot of times when I'm speaking with groups of people, I tell them, identify what you're enjoying in the early stages of your business, and what you don't like, know that you have to do it, but don't be scared to hire those pieces out as soon as possible. If you don't like doing your bookkeeping, hire a bookkeeper so you can focus on your genius and what you're really good at. And a lot of times that's going to move the needle a whole lot quicker. So it's interesting. It's worth a read. It's a good book.
Yeah. No, so this advice I know we've talked a ton about, Thomas, is just the idea of like, know all the pieces and get rid of the stuff that you don't like to do. For, you call it, is it ELF work? Oh, I should know this. You've used
easy,
that.
Lucrative, and fun.
Yes. Easy, lucrative, and fun. Like all that
Instead
stuff.
Of the hard, annoying, lame, and frustrating work. ELF versus half. Yeah.
Half. Yeah.
I like that.
So insulting to half and half. It's just out there just trying to be a good alternative from a cream and milk. No, that's always really, really great. Now, one thing I was really curious on, just because I love exciting, obscure tax strategies. So you mentioned once you get that 200 range, that's when it becomes a little bit more fun, and you can start doing some very interesting things where you threw out the Augusta rule, paying your kids, renting out your home. So outside the Augusta rule, which I'm curious about, unless that was just a definition for renting out your home, I've heard of those two strategies, but can you just share some of the cooler things that when somebody sits down, they're grumpy about visiting a CPA, but then these are the strategies they hear, people get like, "Ooh, this sounds pretty exciting." And just share some of the exciting tax saving strategies you could do at those higher income levels.
Yeah, one that people absolutely love, especially people that are married. There's accountable plans, and there's a Section 105 medical reimbursement plan. So an example I would share with this is, I have an LLC that I do consulting with, and I have the ability to hire my wife. Now, if I don't hire my wife, I can't write off a lot of her expenses, even if she is doing things for my business. But if I do hire my wife and I track and I organize what it is that she's doing for me, not only can my business pay my wife, but I can write off a lot of the expenses that she has in regards to her vehicle, her phone, her other expenses that are going to be paid anyways, right? We took that a step further, and a couple years ago, my wife even got her real estate license to qualify as a real estate professional. And we've been purchasing real estate. She gets the real estate professional status. We accelerate the depreciation and are able to offset that against other income that I have generated as well. So it really, the more money, more problems thing is real. The medical reimbursement, if she's an employee, we had a daughter last year. We had a little girl. I got 2 little girls.
Congratulations.
Applaud. Thank you.
Yep.
They're awesome. Girl dad.
Yep.
Yeah, girl dad.
Yeah.
Girl dad. You as well, Kyle?
All 3 of us then. Granted, Thomas, you're exclusive girl dad.
Yeah.
So I do have 3 boys and then one little very rambunctious girl.
That's awesome. Yeah, I've got the 2 little girls, but we one of the ways that we did that, even when we had the little girl, so we had a health savings account, an HSA. And I love health savings account.
Triple tax advantage. Yeah.
They're the best. Triple. It's like one of the only triples, right? So you put the money in, it's deductible. You take it out, it's deductible. You pay it on medical expenses, it's deductible. We took it a step further with Section 105. We use the HSA. We pay the expenses. As an employee, my wife, I was able to reimburse her for those medical expenses. So lot of really cool things that you can do that way. We had mentioned the Augusta rule earlier. For anyone that hasn't heard of that one, it's pretty awesome. In the 1970s, a gentleman got audited for renting his house out that lived in Augusta, Georgia. And thanks to him, all of us have the ability to now rent our houses out up to 14 days a year tax-free. So one more way that I utilize this, on the 5th of every month, I've got a rental agreement. My business rents out my house. My wife, as an employee, we sit down, we go over minutes, meetings, bookkeeping, monthly goals, quarterly goals, annual goals, track it, organize it, make a transfer of payment. And a lot of times that'll save people $10,000 to $20,000 in taxes just by tracking something that simple. So a lot of things that you're going to do that anyways. You strategize with your partners and your wife or your husband or whatever that looks like anyways. You might as well get it on paper and utilize it as a tax strategy.
Yeah.
Makes a ton of sense.
I will say, I definitely think there needs to be more documentation on the performance review with your wife after, you hire her on. Like, listen, I didn't like the buttons on the shirt. We need to talk about, here's your PIP plan for more steaks next time. Lean me out. No, just kidding, guys. Hopefully that goes very well and swimmingly and everyone's home.
She's on a written warrant.
Yeah. Yeah. We got to keep the performance.
HR's gonna have a conversation.
Yeah. Which is our daughter. No, that's fantastic. I always love those strategies too, because it's so often where I think people think the idea of how could I make my business have a boat instead of just how do we take the normal things that we're going to do anyway, put a little bit of structure around it, a little bit more intention, and boom, save ourselves $20,000 in tax savings. So you could just buy a boat instead of have the government take one from you into the future. So I super smart. Love that kind of stuff. That's fantastic. So, well, I'll go back to you, Thomas. Sorry.
Well, my brain keeps going around like cash flow a little bit because we see clients get tied up with cash flow quite a bit. Kyle and I have been dealing with one this last couple of weeks where it's just like they thought money was great. Cash flow was actually a lot higher than they thought it was going to be. So they had to slow some things down, hurts business skill and all that kind of stuff. And got me thinking about like business credit and that kind of word that lives in this whole conversation and how to get it, what it is, how to actually use it smartly so you can actually use it for growth. Yeah, all those kinds of things.
Everyone wants more money. This is I've never met an entrepreneur that says, Tommy, I wish I had less money, right? Maybe in the show notes, you guys can like put your Venmo or something. If anyone listening to this wants less money, feel free to Venmo yeah. Kyle and Thomas.
We'll take all your less money. That's fine.
It's never happened, right? So personal is personal, business is business. And here's a visual that I'll give everyone. You have a legal name, a social security number or an ITIN, and a personal FICO credit score that ranges from 300 to 850. Do the same thing for your business. Business name, EIN, employer identification number. You can also build and develop a PAYDEX score. And the PAYDEX score is a credit profile for your business. It ranges from 1 to 100. 80 to 85 would be like you having a 750 to an 800 credit score. And we have a really cool business credit process. We're currently getting about $4 million a month in business credit and corporate funding for our clients. And it's just an awesome 7-step process that guides you through how to do it. So step 1 is just having a foundation, appearing as a professional, having a business name, having a business bank account, creating a professional email instead of still using your AOL like I was before I started doing this. And then verifying it with bureaus, Equifax, Experian, Dun & Bradstreet, and then building that up. The major difference, building business credit is not rocket science. It truly is just a process. The major difference, you turn 18, get a credit card, car loan, student loan, they start judging you off that credit history right off. You miss a payment, it takes your credit, right? Business credit is similar. You just have to apply for it, maintain it, build it. Very similar. There's a lot of similarities really between the two, but you have to apply for it and you have to build up that credit profile. And Thomas, getting to your point in my long-winded answer here, once you can have business credit, even if you have $1 million in your checking account, why not use business credit, let the business pay for itself, and then pay yourself from there? Play the reward game at that point. I haven't paid for an airplane ticket in like 8 years due to credit card points, right? It's amazing. I love it. I couldn't imagine if I had to pay for an airplane ticket, I'd like lose my mind. In my mind, they're just free, right? So I think that's the beauty and what people fall in love with being self-employed is the freedom aspect. Credit allows more freedom to still have your cash flow. And even if you do end up paying interest, it's now deductible. It shows as a business related expense. It keeps you more organized. It separates your liabilities and it gives you the ability to build up those points. So building business credit, I recommend it to anybody. Even if you're pre-revenue, you can start to build that credit profile. And as you're making money, it's easier to get larger lines of credit, just like your personal life. You make more money and you usually are able to get larger lines of credit.
That's awesome. No, I love that. That's great. Are there any particular cards?
It made so much sense to me when I learned that all these media buyers that we work with, I was like, wow, they spend a ton of money on airplane tickets, business class, first class around the world. Like, oh no, they're using credit card points and travel rewards. I'm like, that makes so much more sense. It's like, okay.
Yeah, no, that seems to be the route to go for sure. No, I love that. Is there a preferred maybe card or point structure that you recommend more often than not as we unsolicitedly sell a credit card on our podcast?
Check out NerdWallet.
Yeah. Let me just get my affiliate link. Yeah.
So I'm in Salt Lake City, Utah, and it's a Delta hub. So I have the American Express that's tied with Delta. There isn't one, to your point. It's not like I have any skin in the game for any of these credit cards. But if you are looking for a travel reward card, I would say just what's the airline that you travel most based off of where you're located, and what does that airport usually offer the most flights? Is it Delta for you guys as well? Is that?
It's Alaska, probably. All things, yeah.
I mean, it's Alaska. Delta for me. I'm not doing any of that other stuff. Delta all the way.
Let's go, baby. Yeah, Delta. It's a Delta hub here. Most of the flights that I fly are Delta, and so that I would say whatever you're going to actually use, right? If you get triple the rewards with Frontier, but you're going to fly Delta, why not get the Delta card that you're actually going to use? Another really cool thing, we do a lot of estate planning, trust, wills, living wills, power of attorneys, and those flight miles are something that I've included into my trust. So if something was to happen to me, those miles don't just go away. They will actually be gifted to my daughter. Right
I
now,
know they could do that.
If something happened to me tomorrow, they're all going to my 3-year-old. So my 1-year-old would probably be pretty upset, but I should probably change that.
I think you'd have to explain to them what these points were first. And yeah.
In your inheritance, I got credit airline points.
Yeah. I'm going to buy Smashables.
You want to fly somewhere? I don't have money when we get there, but I have a bunch of
we can stay at a hotel for sure. Yeah.
It makes sense. Yeah, it's an asset. So
yeah, that's really cool. That's really cool. So you could give that to the kid you like the least, right?
Yeah.
I got a house.
Yeah, we know in the Sanders household, the bottom son, that's the one that's getting the airline points. So that's fantastic though. So even estate planning, so you guys really have the full coverage. I think one of the things that inherently makes me think, before I'm just going to go down, we could talk taxes, accounting probably all day, but it's a never ending amount of questions. And I know one of the biggest things that happens so often when you're talking taxes and accounting with people is the words, it depends. So for those that are probably listening and thinking, wow, I'm curious, I know it's important, but I know I need a lot more. Are there resources or what are there ways that they could start leveling up their accounting game, no matter where they are? If they listen to this and said, I don't have enough, what do I need to do next to get better? What are the steps you recommend?
Yeah, there's It depends is such a funny 2 words.
Yeah. I feel like that's like accounting 101 is really learning the word, well, it depends, right?
People ask, hey, can I grab you for a minute? I'm like, it depends.
Can I be a billable hour?
We have a full accounting firm. I've got 80 accountants on staff right now. I've got a full team of attorneys. And here's what I can tell you with this. You go ask an attorney a question, and they are going to lean towards it depends or protecting your assets. You ask the same question to the accountant, it depends or the path of least resistance to file your tax return. And oftentimes the truth as an entrepreneur is somewhere in the middle. And when I get asked difficult questions that I don't know the answers to, one of my favorite things is taking our head CPA, taking our head attorney, and forcing them to find common ground. If you're looking for what is the first step in what you can do to better your situation, one of my favorite apps that I have zero affiliation with is called Keeper or Keeper Tax. And what I love about this app, it's like $100 for the year, I think, or something like that. $100, $150, I can't remember, which is deductible. Remember that. But you could tie together your bank accounts, your credit cards. And if the 3 of us were to go to lunch, it would text me and say, Tommy, I noticed you went to lunch. Was this business related? I text back yes or no, and it organizes it for me within the app. So a lot of times when people are first getting started,
that's cool.
It's like it's too expensive to hire. We have a full team of bookkeepers.
It's like QuickBooks for ADHD people. That's great.
Yes.
Yeah.
Yes.
I love it.
If you aren't making money and you're like, I want to hire you as a bookkeeper, I'd be like, no, don't do that. Just download Keeper. And then once you're generating income, let's have a bookkeeper. That tends to make more sense. But knowing your expenses and getting in the habit of tracking them really is the most simple, best advice I could give anybody. And I don't like budgets. That's probably why I don't like Profit First. Sorry, John, if you listen to this, he's going to kill me. But I don't like that because my goal is to just continue to generate more revenues and hire people out of things that I don't like to do. And I have the luxury of being able to do that now, which is great. But if I did it all over again, I'd at least get in the habit of tracking those expenses. So I think that would be the first thing. There's books that you can read that are going to give you knowledge. But in my opinion, Tom Wheelwright has a really good book. It's Tax-Free Wealth. But I wouldn't want to read about taxes if I was starting a business. I'd want to read about business. And I think that if you are interested, reading about it and having some sort of knowledge is great, but tracking your expenses will take you a lot further, and hiring a professional to be able to overlook those expenses and give you a little bit of insight, I think that's much more valuable to a business owner. But that could be a biased opinion. That's what we do. So maybe that's a biased opinion. You guys tell me what you think.
I mean, I would say,
that sounds great. I want that.
Yeah. No, I think again, it's getting a really good habit. One of the things with tracking expenses too, I think when you're a business owner very early on, getting in a relationship where you have a viewpoint and a thought process around those expenses. Because one, you might find you have a bad thought process or belief around expenses towards your business revenue, and knowing that early rather than later is always going to behoove you, right? You'll benefit from that greatly. Or just
it's very
continue
funny
to be that mindset.
Spend or won't spend money on, right? Mm-hmm. It's like, I have no problem dropping all this money on whatever it might be, and they will hesitate to hire someone like you, Tommy, who could actually bolster their business for the long term kind of thing. It's like the dichotomy of what makes sense for them to buy. If it's like marketing related, cool. If it's new software related, cool. If it's something back end, it's like they hesitate, hem and haw. It seems expensive. They don't see the ROI in it. Yeah, I think it's pretty funny.
And I think if you were tracking expenses early, it would force you to start thinking about those, and you could ask questions to yourself in a different way. I think oftentimes people are doing that, think about their transactions in a micro situation, just within that situation, detached from everything else. And so that's why those decisions are easy. Oh, I need to look good before going to an event, so I could drop $5,000 on a custom tailored suit because that's going to do this for business, blah, blah, blah. But you might not be thinking that in the grand scheme of everything when you go to say, oh, I have to hire an employer, do something that's boring to me. So sometimes we don't think about those, and I think the dollar amounts and trying it back to something. is always interesting. Anyway, so, well, let me ask this. So if we mentioned before, there's a lot of people just getting started. For those that feel like they're ready to work with you guys, talk a little bit about Prime Corporate Services, what you guys do, and who the ideal people are that should be working with you.
Yeah, for sure. So we got 4 core services: entity structure, LLCs, S corps, corporations, kind of like we talked about with an entity standpoint. So if you have an entity in place and want it to reviewed to make sure it's set up properly, have the privacy, have the protection, we're happy to talk to you. If you don't have one and see the value and the benefit, happy to talk to you. We build and develop business credit and corporate funding and walk people through those 7 steps on outlining what accounts are best to apply for to rapidly build your business credit. We've got a full service accounting firm, bookkeepers, monthly taxes, quarterly, annual, sales tax, anything that you need from a tax standpoint, we really have it at this point. And then also estate planning, trust, wills, living wills, power of attorneys, and kind of our thought and what we've taught our team is let's just sell the right product to the right person at the right time. And because we've built our business off that, we started in 2012 and we've structured over 150,000 businesses since. And it's just do right by people. If we sell the right product to the right person at the right time, we always offer free consultations. I think anyone that has a self-employed income or intention to be self-employed is a worthy candidate of taking advantage of that free consultation. Just because if it's not right for you now, it probably will be in the future. And that free consultation is just to say, hey, Thomas, everything you've done, you're set up properly. Go make more money. If you need help with taxes, let us know. But if you need a little bit more guidance, we do offer that free hour consultation so that you can break down your situation and understand that it's not about where you are right now, it's where you're going to be. And having that roadmap of when it makes sense to have the estate plan, if it makes sense to have a holding company because you have multiple businesses. Is the income you're generating active or passive? When you have answers to those questions, it allows you to make educated decisions. And we feel that we offer services and provide a service that everyone needs. So we're happy to help. The free consultation is there. Fortunately, we're able to do that. We've got 350 employees now. And when we first started, it was me and 3 other people. So I never in a million years thought we'd be able to do this. And I'm very grateful that we are. We actually started with e-commerce business owners. I don't know if you guys have ever heard of eBay. Might be
maybe a touch.
Small little company.
Yeah, I still have an argument about a sweater I bought from them one time, but
I ordered the fakest pair of Jordans.
I bet. Jordans with a G.
The Jumpman sign had 5 fingers instead of a ball. And I was so impressed at how fake they were. I kept them. I still have them.
Yeah, that's great.
But yeah, it's for everyone. Anyone that wants a little bit of guidance, if you're interested in entity, business credit, tax, estate, just let us know. That consultation's for you. They'll guide you through it. Our team of advisors will when you schedule a call. But take advantage of the call, get the most out of it for you, and we're here to help. We're here to serve.
Awesome.
Yes, I know we got you set up. We have Prime Corporate Services set up as a partner for ClickBank because, yeah, y'all have done great work in the space. And it's all really one of those business needs. I think a lot of business owners listening to this know they need to get someone to look at, even if they have, I set up an LLC and I thought I took care of it. Or, I had someone, a friend of a friend's accountant set it up for me and it should be great. It's like, have someone look at it, double check and start thinking a little smarter because it does add up tremendously over time.
Yeah.
So
your uncle's tax solution is not smart.
So we'll link to the partner page in the show notes and all that good stuff. But where else can people find you or Prime Corporate Services around the web, Tommy?
Prime Corporate Services, everything. So Facebook, Instagram, website, primecorporateservices.com, Prime Corporate Services on Facebook and Instagram. We try and do tax tip of the week. And we do that to keep you thinking about taxes. You see, oh yeah, I need to track my expenses as you're scrolling through. So like us on Facebook or Instagram and You can check us out at primecorporateservices.com. You can schedule a call on the link that we've provided for ClickBank to schedule that free consultation. That's us, Prime Corporate Services. I can't believe that we're in the opportunity to be able to have these conversations, and it's humbling. It's honestly awesome, and I truly appreciate you guys having me on. This is fun.
That was great. I think I met Steve, 6-7 years ago now, and it's been really cool to see how y'all continue to grow and just double down and just keep improving and just become like a really large stakeholder in the space almost. So it's been fun to watch.
Yeah, I was going to say, just being able to have that as an entrepreneur, that what you guys provide, not only just as a consult, but all the services that come afterwards, such a critical game changer of turning your entrepreneur story from a nightmare that you'll tell people in the future to something that you could tell with pride and be something that's really amazing for you. Like I said, protect and keep the money that you make instead of just live in the memories of what it could have been. So I think that's huge for people. So go ahead and definitely just flood them. Let's see if we can get all the 350 employees on the phone, because there's so many people from this podcast that go to that consult. It make me happy because that means that we're getting money away from the government. So huzzah. But with that, again, thanks so much, Tommy. This was fantastic. I love, romping around in some accounting and tax stuff. It's always fantastic. And hopefully everyone else loves it as much as we do after this episode, because it's always good.
Love it. Yeah. No one cares about your money more than you do. I can tell you that right now.
Yep.
Or your airline credit points like your daughters do. Awesome. Well, thank you, Tommy. And Kyle, I think you have missed your calling as like a phone-a-thon runner. So yeah. Awesome. Well, thank you for listening, everybody, and happy scaling. Do check out Prime Corporate Services and leave your questions, rate, comment, subscribe. You can email affiliated@clickbank.com, where I will remember to go check the inbox to that after this, as I just said it, because it's been a little bit since I checked it. But thank you to everyone who does email us. We do appreciate it. And if you have any questions, if you need to get in touch with Prime Corporate in another way, we can help out with that. Or if you just want to let us know that we look like some celebrity that will be named. It was like those two. So thank you, Tommy.
He looks like a celebrity that we have named.
Thank you, guys. Appreciate it.
Awesome. Cheers. Happy scaling, everybody.